What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about what's going on with the overall market and why you should be very cautious right now. I'm going to talk about why it's still possible for the market to try to push up even more depending on the debt ceiling, depending on Jerome Powell for tomorrow, as Jerome Powell is going to be speaking. But for the medium term, I'm getting lots of signals, like way more signals than before, that are screaming that this is a fake rally, it's very artificial, and we have to be careful here. So I'm going to break down why on earth it's very important to look at this, why the market can be very tricky sometimes, and why I'm still quite confident that these signals will end up being correct, and there will likely still be that rug pull, but a lot later on, maybe for the more medium term. It could take many weeks, it could take another month or so before the real pullback comes. And for the short term, right, for tomorrow and beyond, we could still try to hold around these levels, maybe even break higher depending on Powell and other factors. So I'm sticking with my word. I'm gonna break down why on earth I believe this, what the technicals are telling us, and I believe it's very important for me to share what just happened. Something huge just happened. Before I break anything down about what just happened, though, before I talk about why on earth you have to be super careful, let me just mention a couple of things real quick. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. The offer ends in just 11 days, so check it out before they run out. With that out of the way, let's get on with the video. So what's going on with the markets, right? In my video from yesterday, I talked about how there could be another pump today, and that is what happened. But please note, guys, that I'm not really backing out of my words. I think a lot of people in the comments misinterpreted what I said. I told you all that there could still be more upside for the markets, and I said that. But what I've been saying for the last few weeks was not that the market would crash immediately. In fact, I never said that. I told you that for the medium term, as we approach June, getting into June, I was thinking the market would get that rug pull. And I still stand by that, but I'm not as certain about the exact timing of it. But for the short term, I did turn a little bit more bullish than before after what happened yesterday. That was very unexpected because of what these congressional members are saying. And I really can't predict exactly what they're going to say. Unexpected things could happen. And things are becoming even more complicated because some congressional members are now saying that there's been no progress made. The debt ceiling is about to enter a crisis. And there are just so many different opinions now. And yet the market is holding up. But for now, the market is very optimistic, believing that there's going to be a great deal closed quite quickly. If that does happen, we could pump more for the short term, right? It is still possible. It is still a possibility. But I want to warn you all, and I believe it's super important for me to go over this, okay? I know I can't predict the future perfectly. I know it's very hard to predict like many months out, but the technical signals, I'm going to just talk about what these technicals are telling us. They're screaming in our faces that we should not trust this rally. All right? I'm going to be blunt. That's what they're saying. They're saying that there's going to be a big rug pull soon. How soon? I don't know. I don't know the exact date. Could happen as soon as June. But I want to break down exactly why I'm still, holding this point. And please let me make this clear, okay? If I make videos where I talk about how there could be a pump, I could be referring, and I likely am referring for like the short term, right? Today we pumped more just as I predicted. But when I talk about the rug pull, I'm not talking about it starting tomorrow immediately, right? I'm oftentimes talking about the medium term because there's so many sell signals developing as we approach June, all right? And I still hold that position. I'm going to break down exactly why. I just don't know the exact timing. I would presume around June time. It could take a little longer, but once again, guys, I still see the big rug pull. I'm going to show you exactly why. But first, let's talk about the news. I mean, we have some important earnings coming out for Friday. Actually, for Friday, it's just Foot Locker and just a couple of others. We also have Ross after the market closes today. Not too many big earnings. We just had like Walmart and Alibaba today. And then I want to also note that we have a crazy day tomorrow for options expirations. We have max pay at 407, 2.16 put to call ratio. Okay? This means two possibilities. Excuse me. We have over This is like close to 2.6 million puts expiring and about 1.2 million calls expiring. All right. The market makers are incentivized to try to hold the market up to cause as much pain for the puts or the shorts, but that does not guarantee anything because we have an external factor. We have Jerome Powell speaking tomorrow. He's going to be giving a speech. And you also can't forget that there are only 33,000 puts in the money. You know, if I was a short, I would be so angry. They might try to double down and fight back hard. So you have to be open to anything. Now, I would love to give you guys what my like really objective prediction about this, but it's very hard for me to do that because Jerome Powell is speaking tomorrow at 11 o'clock a.m. Eastern time. When Powell speaks, the whole market is going to move. He could pump the markets or he could crash the markets. We have to be super cautious. I don't know what he's going to speak about. That's like the big problem with tomorrow. I don't know if Powell's going to talk about the debt ceiling, if he's going to talk about raising rates again, or a Fed pause. I don't really know. If he somehow unexpectedly says a pause is on the table, the market could pump. If he fails to do that and he just remains very hawkish and he remains very uncertain, just like during the last FOMC meeting, we could see the market get rug pulled. So you have to be open to any of these possibilities. I'm not a fortune teller. I do not know what Powell is going to say exactly. He could say things based off what he wants to happen. He could turn very hawkish if he wanted to, or he could become dovish. It's really his choice and based off, I guess you could say whoever's pulling the strings, but I don't really want to go into too many details down that route. The bottom line is he's going to cause a huge move, and we have to just wait and see. Now, let me talk about the markets now. If Powell pumps the markets, okay, if Powell says very positive things, if he talks about the Fed pausing, this thing could fly. SPY could fly all the way up to 420 or even higher than that. And that's just for the super short term. If Powell rug pulls the markets, SPY is going to come down to probably, it's going to get a big rug pull. I mean, there's this gap down here at like 407 that happens to align with max pain of 407. I'm not going to talk about 407 just yet. We're going to likely have to retest 415. If that fails, we're going to likely come very close to about the 410 zone. Then there's 409. And then after 409, if that fails, then there's 407. That would be a huge crash if Powell does rug pull us very hard. That's also on the table. Okay? And max pain happens to align with this gap right here at 407. I find that very interesting. But I'm not guaranteeing anything. I'm not promising anything for tomorrow. Powell could pump us or he could rug pull us. Seeing how we pumped so hard in just a matter of a few days, the odds do favor him causing downside, but I'm not guaranteeing it. We also have a bearish divergence developing on the 30 minutes, the 1 hour, the 4 hour, and the daily charts. And this is just for the short term. The odds do favor Powell causing us to come down, but I'm not guaranteeing it, right? It's a little bit more likely, but you always have to be open to anything because I don't know what Powell is going to say. Okay? It's also possible for the market to, continue to rally hard tomorrow. Not guaranteeing it, but it's also a possibility. But now let me talk about the medium term because there's a problem for the bulls. First off, look at the 1 hour time frame. The MACD and RSI have been downtrending, where the price has been trending in upwards direction, breaking to a new high. This is a bearish or negative divergence on SPY. On the 4 hour time frame, okay, the same thing is happening. Look at the MACD. I know it's a little small. Let me try to make this bigger. This is a negative divergence that's developing. Same with the RSI. Could we pump for the short term? Sure. For the medium term, right? As we approach June, maybe a little bit into June, maybe it could take a little longer. Who knows? There's going to be a big rug pull. SPY is going to crash. Looking at this giant divergence that's still developing. Okay, I want to warn you about this. But I know I've been saying this for a while, but I never said it's going to happen immediately. I've been saying as we approach June, during June, I've been saying that. Look at this negative divergence on the MACD on the daily chart. Same thing. The MACD and the RSI are telling us the same things. And then if you zoom into the daily, it's forming again on the RSI. The RSI is telling us don't trust the rally. Could it pump a little bit more? Yes, it could pump more. You can make money either way. It could pump more for the short term. For the medium term into June, right? Around June, maybe even a little bit longer, who knows when. But I'm just going to estimate around June or so. There could be a big rug pull coming. And this is what this chart keeps on screaming in our faces. We could pump more because of the debt ceiling for the short term. Sure. But for the medium term, please be ready for that. Now on the QQQ, the same thing is happening. We have this rising wedge. I just hit all my drawings. By the way, I hit all my drawings so you can see this quite clearly. But look at the MACD or the MACD. We have a double negative divergence that's actually forming. It's becoming a triple right now. It's still in the process of forming. The signal line and the MACD are still showing a downtrend when the price is making this uptrend. And look at the RSI. The same thing is still developing. There is still a double negative divergence on the RSI. The price is pumping like crazy, but the RSI is not really following it. Could this thing pump more? Yes, it could pump more for the short term. But as long as these signals remain, the odds are going to favor a big rug pull eventually. A very big one, not like a small 2% drop. I'm talking about a 5-10% drop, something huge. And we're still getting the signals that are telling us this. Now, let me show you guys something else that's crazy. You could look at the 1 hour. Let me first talk about this, and I'm going to talk about the crazy thing. On the 1 hour time frame, on the QQQ, if you zoom out, the same thing is developing. Look at the MACD, the MACD, whatever you want to call it, the RSI, same thing. It's still developing this negative divergence. That makes me very, very suspicious. What do I mean by being suspicious? Well, I don't fully trust the rally, and I'm starting to suspect that maybe Wall Street they're pumping the markets. They're going to let this thing pump, right? They're going to turn everyone bullish. And then they're going to start shorting at the top. And then retail and people start buying and buying and buying. And then they smack the market down. Or they know something is about to come, whether it's like a hot CPI, a bad piece of data. Maybe it's because of Jerome Powell. Who knows what it's going to be? I don't know what the catalyst is going to be exactly. And that's why I'm just talking about how for the more medium term, it's still developing in this way. Now, for the short term, the market could pump more. Sure, they could keep pumping it. Maybe Powell pumps us. I am doubting that, though. I am seeing signals suggesting that the odds favor him not doing so. But let's just say he does pump us. That's fine. Let's just say the debt ceiling, helps the market pump more. That's fine. The market could pump more off the debt ceiling for the short term. But for the medium term, I'm warning you guys, a huge, huge move to the downside is still pending. And it's likely going to come over the next couple of weeks. Could take a while. I want to warn you guys because the signals are still screaming this. But here's the crazy thing. Look at the dollar index. The dollar is exploding. It's absolutely exploding, right? The dollar just keeps going. But here's the thing about it. Let me show you guys how important the dollar is. For the people who are not familiar with it, look at the dollar next to the SPY, for example. We're going to look at the daily charts. Look at how important this is. When you zoom out of the dollar, notice how simple this trend has been. But what you'll notice is, okay, the dollar started to, explode around, it started pumping a lot around this September to October period. And then what happened to SPY during that time? September to October, the market crashed and SPY made its low of the year, 345. And then notice this. What happened after that? Well, the dollar started it basically traded sideways in October, and then it started crashing as we approached February. So the dollar started crashing between October and February. But look at the SPY. Between October going into about the February period, so right here, the market found this top around this 417 area. And then what happened? The dollar broke out. The dollar went from 100 all the way up to 106 between February and March 9th. And then look at what the market did. between February and March, this is like March 14th, SPY went from 416 all the way down to 380. So that was a big drop it got. It got rug pulled. I'm sure you guys remember that back in around like March. And then what happened was the dollar from 106 between March, it started crashing as we approached April, and it remained low throughout like May. Now look at what happened to the market. The market started pumping as well, right? The dollar has been crashing, market has been pumping. But now look what's starting to happen. The dollar is starting to break out. What happened when the dollar broke out? Every time from the past year, year and a half, 2 years, you could even go further back, like for the past 5 years. When the dollar breaks out and keeps going, the market gets a rug pull, right? Maybe it's a few weeks early. That could also happen. Could be a week or two early. But this is telling me that this is very suspicious. This run up is very, very suspicious. And on top of that, let me just add that the dollar hit 106. And when the dollar went from 100 to 106, the market crashed from 417 all the way down to 378. And the dollar just went from 100. It's currently at like 103.5. It's getting close to 106 already. And the market has not gotten the rug pull yet because of the debt ceiling and other factors. It also invalidated this head and shoulders, which tells me there could be more room for upside. But like I said, the dollar is telling me that we should just be very careful, be very cautious, be very careful in this market. Could the market pump more? Yes. I'm going to keep repeating this so it's clear to everyone. For the short term, we could pump more. We could hold up for longer, thanks to the debt ceiling, thanks to, even Jerome Powell. But for the medium term, so many signals are telling us the market is just due for a very big pullback. A big correction is coming. And the signals are still shouting that in our faces. And my job here is not to be biased. I don't want to just, take one side and just say that, oh, it's the end of the world. I'm always a bear. I'm not a bear or a bull. There's some videos where I say the market could pump like yesterday, but the market got the pump today, right? I was predicting it for today. The market could pump more. That's what happened. But I'm simply looking at the charts, and that's what the charts are telling us. And I want to be as objective as possible. Let me just add the VIX, the volatility index. It's still forming, or it's been forming this bullish divergence right here. And it hasn't gotten a clean breakout just yet. That's the thing about it. It tried to, it ended up failing. For now, it's going to take more time. I think the VIX is very manipulated. On the weekly charts, there is technically a bullish divergence that still exists, but it's not breaking out yet. So there's no signal that the market is crashing yet. But could the VIX bounce in the future? Yes, because there is a bullish divergence. When is it going to bounce? It could take a couple of weeks. It could take another month or so. But eventually, this signal is telling us it's likely going to happen on the weekly and also on the daily charts. And then another big red flag was the SQQQ. I'm going to double check this for you guys. The SQQQ on the weekly chart, it looks to me like it technically still has a bullish divergence, but it's very massive. A massive bullish divergence right here that's developed on the weekly. On the daily chart, it technically has it right here on the daily as well. It's very, very oversold right now. But it did invalidate the one that was like right here. So there is technically a large one, but it's not looking as convincing as before. But on the MACD, on the MACD, it is still present. Excuse me, sorry guys. So on the RSI, it's not looking as strong, but on the MACD, it's still present. And this is telling us that, the SQQQ is bound for a nice bounce in the future. When? Maybe by June, it could start to bounce. But until then, right, we have more time and this thing could remain at these low levels and the QQQ could still pump a little bit more. But I just want to call out all of these signals because they're very suspicious to me. Very, very suspicious. But now let me just quickly break down some of these charts. I'm recording this like during power hour. The market is still holding up. We're just a few minutes into it. A suspicious thing I'm seeing on the 1 hour time frame for like the really short time frame is there is a bearish divergence right here on SPY. It doesn't guarantee anything because we are reacting to the news, but it does make me a little bit more inclined into thinking that Powell could rug pull us a bit. It's a possibility. It's a little bit more likely, but I'm always open to any possibility. And that's why you have to be ready when he gives his speech, because I don't truly know what he's going to say. I'm always open to any possibility, right? If he pumps us 420, he's going to come or higher on SPY. If he rug pulls us, rug pulls us, we're going to see 415, if not 410 after that. Now on the QQQ, if Powell pumps us, okay, we're likely going to see the QQQ get closer to about 340. If Powell rug pulls us, we're going to see this thing come all the way down to where this imbalance is, which is around 331 to 330, if not a little bit lower. What's more likely, I think, looking at the chart, it's a little bit more likely that Powell might slow us down, but it's not looking as convincing on the QQQ. So I'm very open to any possibility depending on Powell. I just want to make that as clear as possible, okay? For Tesla, my prediction on Tesla was this thing would rip to about 176. That was my prediction from yesterday. So far, Tesla has done that. It reached 176 in the pre-market and hit a high of 175.22 as of right now, but it's holding up quite nicely. It could even break its high. I mean, it's doing quite well. Looking at Tesla, though, I'm not seeing anything else too special that's going on from a technical standpoint. Uh, there is this, there is technically, it actually came exactly to where this imbalance was. So it did reach the imbalance area. So it's not as, what's the word, like incentivized to pump as much from an algo perspective. And now it's really just going to depend on what Powell says. If Powell pumps the markets, Tesla's going to get to 178, if not 180. If Powell rug pulls the markets, Tesla's going to crash to about 170 or so. Now, what am I thinking? I'm very open-minded. Either one of those are very possible, but I'm leaning a little bit more towards like the downside because of Powell. But once again, I'm always open to any possibility. For Coinbase, I predicted this thing would pull back a bit and then maybe try to bounce. It did pull back to about 57 and bounced to about 61.7, came right back down to the 200 EMA, and now it's likely just going to depend on what Powell says. There is technically not a whole lot going on in this chart. We did form we have this heavy resistance right here around this zone. It could make its way back down to like the 56 level tomorrow, depending on Powell, but I'm always open to the possibility of it bouncing around this 200 EMA. So if we open around this 200 EMA around this 58.7 area, Powell could cause it to bounce. It's a possibility to about 61, or he could rug pull us, and if that does happen, the confirmation is going to be a break below the 200. If that happens, this thing is going to make its way down to about 58, if not 56 flat, all the way down to the 56 zone. Uh, what am I leaning towards? Like I said before, guys, I'm leaning a little bit more towards Powell causing the rug pull. I think the odds favor that, but I'm always going to be open minded regardless. I don't truly know what he's going to say. So I just want to remain open minded. The HYG is red. That's another divergence on SPY and the S&P 500. We're seeing a lot of smart money selling right now. They're selling their positions. They don't really trust what we're seeing. On Microsoft, on the 1 hour time frame, it's holding up quite nicely. If we're even more bullish, it could try to break out to about 320, depending on Powell. If we're bearish, it's going to make its way down to 313, where this the 50 EMA happens to be. Now, where am I leaning? Well, we do have a bearish divergence as of right now on Microsoft. If it plays out, it's going to end up coming down to about 313, if not 310. The odds do favor that for tomorrow, but I'm always prepared for anything because I don't truly know what Powell's going to say. For what else is there? We have Amazon. For Amazon, I'm not seeing any sort of. I am seeing a bearish divergence as well on Amazon, technically. The RSI has been making these lower highs, so as the MACD or the MACD. But it has some nice strength to it because on the bigger time frames, it has a better looking PPO between the signal line and the MACD with better looking histograms. So my opinion of Amazon is if we are bullish, it's going to try to get all the way up to like 120. If we're bearish, it's going to come tanking all the way down to about this 114 area. If that fails, then there's going to be 110 again. Where am I leaning towards? I mean, I do think Amazon has some relative strength, so it might just drop a few dollars to about 114. And I do believe the odds favor that. But I'm once again open to anything because I don't know what Powell's going to say. For Nvidia, this thing just continued to rip to the upside. I told you yesterday that Nvidia might cool off a little bit in the morning, get a little bit close to about 300, and try to balance and just continue ripping. That is what Nvidia did, except it didn't drop as hard. It just kept going. It doesn't really care about being overbought. It just keeps going and going and going, which is very interesting. I'm not seeing any negative divergences, and there's no clear sign of this thing like crashing or tanking. So it looks like it has a lot of strength compared to the market. Now it's going to react to Powell. If Powell pumps the markets, 318 then 320 are going to be tested. If Powell rug pulls us, Nvidia is going to make its way down to 310 or lower. The odds do favor that happening, in my opinion, but I'm always open-minded. I think Nvidia might retest 310, and then we'll have to see after that. But for now, just remain open-minded. For Aapl, it hit 175. I told you guys Aapl might try to bounce a bit. Now, what I'm seeing is there's not a whole lot going on. There is technically, I mean, it's basically getting stalled at this heavy resistance between this 175 zone. And there is a giant or a much larger negative divergence that's developing on the 1 hour time frame, right? You could see where our MECD and the histograms were with the RSI compared to where it is right now. The chart's made a higher high, but these technicals are making lower highs, which makes me very cautious on Aapl. Additionally, zooming out on the daily chart, the same thing still developing right here. We're very close to forming the same high as before, but the technicals are just not looking as strong for it. So that tells me that Aapl for the medium term, it has downside for the medium term, right? By June or something like that. For uh, for the short term, it still has this bearish divergence. So I'd be very careful on it. Now, if we're bullish, let's just say Powell pumps the markets. Apple's going to make its way all the way up to almost 177.5. If we're bearish, Powell's going to rug pull us and Apple's going to retest 172.75, then 170 flat. Where am I leaning? I think it's more likely that it ends up coming down. I think the bears might try to double down and bring the market down. They have a tendency of doing so. But as I mentioned many times, be very open-minded to anything. But I just told you what I think is more likely. For AMD, this is holding up quite nicely, but there is a negative divergence as well developing. If it's bullish, if Powell pumps us, 110 is going to come. If we're bearish, watch for 104, then 102.5. The odds are starting to favor it cooling off a bit. It is quite overbought. So I'm leaning a little bit more in favor of the bears, but for now, it's holding up okay. For Google, I told you guys that if Google broke out, it could get closer to about 125. We came just short of that at about 123.9. Google also happens to have another negative divergence on the RSI, not as clear on the MACD, except like right here I'm seeing it. So Google looks like it's going to get a correction soon. Maybe Powell causes it. Could we pump off Powell? If it does happen, I mean, 125 could come in the very least. If we don't pump and Powell rug pulls us, expect 120 or even lower than that. What are the odds favoring? Well, the odds are starting to favor downside. We do have this imbalance like right here is another one that formed like right about here. So it looks like Google needs to retest like 120 first. It's looking a little bit more likely that Google is going to get a correction, but I'm going to remain open-minded because Powell could say anything. Just like how during the debt ceiling, I made the mistake of thinking too much about the past, which included many politicians just continuing to argue it out and blame one another and play politics. And unfortunately, that's not what happened. Or I would say, fortunately, that's not what happened so far. For the most part, politicians have been a lot more open-minded, and they've been shaking hands and being more open to negotiating. So that's a good thing. I really hope it continues that way, but talk is just talk until we have action. So we have to wait for the action. But anyways, the point is always be open-minded and prepared for anything. But I am leaning a little bit more bearish based off this setup, right? We have these imbalances right here, bearish divergence. I think Powell might cause a bit of a drop. For Meta, I told you guys this thing